Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about non-resident RRSPs. And a lot of you are looking to leave Canada or retire abroad. Maybe you haven't thought about what happens to that RRSP that you've built up over your career when you pass away. Whether you're single, and we're going to talk about that today, or you're married or common law. We'll talk about that as well. So what happens to that registered account? It's treated differently as a non-resident versus a resident. And you need to know the differences and what the tax implications are when you pass away. So let's just quickly highlight what happens if you are a resident of Canada and you pass away with an RRSP, registered account. RRSP or RIF, let's say. If you're in Canada, resident of Canada, when you pass away, that RRSP is paid out or transferred, rolled over to the beneficiary. Let's say you're married or common law partner. Your RRSP essentially, as long as you name them as beneficiary, would roll over to them tax-free. So if you had $300,000 in your RIF when you passed away, that would roll over to your spouse or common law partner. If you're single, let's say you name your nephew Jimmy. Jimmy would receive your $300,000 RRSP. There's no withholding tax on any of this. So when you pass away as a resident of Canada, there will be no withholding tax on your RRSP or RIF. Very important to note, because what happens, and I talked about this just on a video not long ago about naming a beneficiary. If you named your nephew Jimmy as a beneficiary on your RRSP or your RIF, Jimmy would get the full $300,000, but your estate would be liable for any taxes due there. So when Jimmy gets that $300,000, it is after tax money. If you have a spouse or common law partner, that $300,000 would roll over to them. There would be no taxes due. They would continue to pay tax on it as they pull it out of the RRSP or RIF. When they pass away, if they're not remarried or have a common law partner, then there would be tax to the estate at that time. So the CRA's kind of definition or reasoning behind no withholding tax at death if you're a resident of Canada is that the money is deemed received and not paid. So only when money is paid from a registered account, there's withholding tax, not when it's received. And of course, this creates the issue that I want to talk about today is, well, what happens if you're a non-resident of Canada and you pass away? The money is received, not paid. So in theory, CRA would not collect taxes. There's no tax filing on your end or the executor's end. And thus, in theory, Canada would lose out on any taxes due if you pass away as a non-resident. Now, knowing CRA, obviously, they want to fix that issue, and they have fixed that issue. So let's talk about what happens when you pass away as a non-resident. Now I'm going to use an example of John. So John is a single, let's call him a 55, 65, doesn't matter the age, has no spouse, common law partner, or dependent kids or grandkids. Just a single person that decided to retire abroad. John has $300,000 in his RRSP. He retires abroad, converts it to a RIF and starts drawing money out. Years down the road, could be months down the road, doesn't really matter. He's a non-resident and passes away. When he passes away, let's assume he has $250,000 in his RIF account. Being a non-resident, what's going to happen with that money? So because when John passes away, his RIF would be sent or passed on or received by the beneficiary, in theory, if it used the same rules as a resident, then there would be no withholding tax. And of course, again, this goes back to the issue of Canada's not collecting taxes then. So to address this, the Income Tax Act has a portion to it or a clause in it that says when a non-resident passes away with an RRSP RIF registered account, it is deemed received, but there's withholding tax on the amount. So the wording in the Income Tax Act actually changes it from received to paid. And as a non-resident of Canada, that withholding tax can be up to 25%. So let's take John as the example here. So when John passed away with $250,000 in his RIF and had no spouse, common law partner, dependent kids, or grandkids to kind of roll that money to, that money is deemed paid, and there is withholding tax of 25% on his $250,000. So that would be held back by the financial institution and remitted to CRA. His estate or beneficiary would receive the remainder of the funds. So again, if you're a non-resident of Canada and you have registered money and you're single, and that's a lot of you. We've done a lot of plans for single people. I know I think the number is around 40% of Canadians retire single. And of course, even if you retire married or common law, eventually one of you will probably be single at some point. So it's very important, even if you're common law or married, to understand, okay, well, if my spouse passes away, what happens then when I'm single and I pass away? So when you're non-resident, you have to understand that there is a withholding tax. So it could be up to 25%. Any registered account at that point would be withheld by CRA as taxes due. So if you're retiring abroad, becoming a non-resident of Canada, this is where it's very important to start that RRSP meltdown. What we talk about on this channel is melting down that RRSP, deferring CPP and OAS, create a better tax strategy for yourself. And again, a lot of you say, well, Adam, if you defer CPP and OAS, it's government money that you're not collecting. But the reality is that you're front-end loading your registered accounts, giving you more money, and then you're deferring and getting a good deferral benefit from that CPP and OAS. And again, we have a lot of videos on that. I'm not going to go into that in detail in this video, but 25% withholding tax on death if you're single, that should be enough motivation to create a better tax strategy to melt down that registered account, get it in your hands after tax money, create a better strategy for your estate. Whether you have people to leave that money to or not, I think we'd all rather leave it to, let's say, a charity versus CRA. So let's look at the other side of the coin. What happens if you're married or common law partner? Very similar to if you're a resident. So if you pass away, have a spouse or common law partner, your RRSP RIF registered money can transfer over, kind of roll over to your spouse or common law partner. No withholding taxes due at all. So very much the same as if you lived in Canada. So there is that rollover provision that's allowed. So if you're a non-resident of Canada, you can roll over your registered account to, again, your spouse, your common law partner, or a dependent child or grandchild. The last two, dependent child or grandchild, if you're living abroad, sure, your child or grandchild could be with you, then you can roll it over to them. But otherwise, again, they have to have a SIN number to be able to set up the account to roll it over to. So it's a bit more complicated, and we've come across those case studies before. Most common, it's going to be rolled over to your spouse or common law partner. So CRA does require you to fill out a form. It's NRTA1. So NRTA1 is the form you have to fill out as a non-resident to roll over your registered account to your beneficiary, to your spouse or common law partner. Now again, you do not need contribution room. So if you're rolling your RRSP just like in Canada, if you're rolling it over to a spouse or common law partner, they do not need the contribution room. It just rolls over them. That's part of the Income Tax Act. Now, one important note is what happens if you and your spouse retire abroad and you're both non-residents? And let's say one of you pass away and it would roll over to the other. It's important to note that your registered money can roll over to your spouse or common law partner regardless of where they live. Or even, again, dependent child or grandchild. They don't have to be living in Canada. It can roll to anyone, anywhere, but they have to have a social insurance number. And the reason they need a social insurance number is to be able to open up an eligible plan. Again, let's say I had a RIF. So let's say Steph, my wife and I retired abroad, we're in Portugal, or retired non-residents of Canada, and I have a RIF, and Stephanie has nothing. Maybe she spent all her, whatever it is. If I pass away, then my RIF can roll over to Stephanie. But what happens if she doesn't have a RIF? That's where she would need to have a social insurance number to open up the RIF at a financial institution to roll that money into. If she does not have a social insurance number, she would not be able to roll that money over. So again, if your spouse or common law partner does not have a social insurance number, that might be something you want to think about getting for them if possible, so that you're able to roll that registered money over to them. So there you have it. Passing away abroad as a non-resident with registered money is very different, especially if you're single. And again, even if you're not single, you could be single one day. So pay attention to that. Have a plan in place. Make sure you understand when I pass away living in the Philippines or Portugal or Mexico or wherever, and you're a non-resident, understand the tax implications. There will be withholding tax at time of death if you're single or if you have no one to roll that over to. Now again, if this is your situation, make sure you talk to a tax professional or your financial planner to make sure that you have all the T's crossed and the I's dotted, because there is a lot more to this. You have to have it set up properly, have a good will in place, just have the proper structure. So don't just try and do this on your own. Talk to a tax professional, get this in place, and just create a better strategy moving forward. So hopefully this helped you guys out. If you enjoy these videos, if they're helping you, hit the thumbs up. If you haven't already subscribed to the channel, hit the subscribe button. About 50% of you are still not subscribed to the channel. It really does help get these videos out. It helps with the YouTube algorithm, which is a very weird thing, but it does work. So I do appreciate it, and we'll see you in the next video.